YouTube, this is just going to be a quick update on my $100,000 account challenge where I'm taking about $3,250 and I'm going to turn it into $100,000. And today is day 12, and I also found a really interesting indicator that might be a cheat code. Today is my first day actually using it, and I want to share with you guys what I found, which could be pretty insane. But first, let's talk about the trade that we were swinging from yesterday. We entered at the low of day here, and when the market opened, the contracts had unfortunately decayed quite a bit. The strike price on those options was at 743 and we did not get there. We were up about 150%, about $150 right here, but we immediately tanked and I didn't get the chance to sell any of them yet. I thought we could continue to rip higher, which didn't happen. But that's okay. I was fully prepared to ride those contracts to zero, and that's exactly what I did. Then I also took a couple of other trades today. I took these two short positions here. I got stopped out once trying to get into the position, and then I had a winning trade immediately after. Overall, about break even here. And in the last video, we had a cash balance in the account challenge of $3,150. And after taking the loss here and a little bit of a loss over here as well, we now have about $2,950 in the account. So we lost about $200 today. And that's okay. That is about what I had planned to risk. And so one thing that I noticed while I was trading today is that as the market was tanking, I was looking to lean long. And so as the market tanked, I was like, okay, what's the next like support level? Where should we go long from? And so I was looking at the gamma exposure levels and we had a put wall on the S&P 500 at 730. And you can see right here, this is 730. And the way this works is you can think of these gamma exposure levels as like a mountain that the price has to go over. And so all of a sudden, as the price drops to 730, you all of a sudden hit this mountain. And so over here, we've got 730 marked out. And you can see we hit that mountain and then reverse. And this happens because dealers, market makers and dealers, they have to hedge their portfolios based on these gamma exposure levels. And so as we came into this level, what I noticed with this new indicator I have here, so this this is relative volume by time. You can find similar indicators in the TradingView Indicators tab. I modified this one a little bit for me, but what we can see here is a 1.0 is normal standard volume. Anything above like a 1.5 is, higher than normal. Above 2 is 2 times more than normal volume. And we can see, so the red and gray bars are like very low volume, and then anything green is is like, normal volume. Light green is like, okay, this is like solid volume, and then blue is like this is like market makers, this is dealer hedging. And right here we can see we have 2.5 times the normal volume as we come into this 730 gamma exposure level, and that marks the exact bottom. That's pretty wild. And so now so this is my first day using this indicator. I don't think it's going to be as easy as like seeing these two things combine, the gamma exposure and the volume. I don't think these two things alone are going to be enough to confirm the trade. So I'm not sure if you would really just want to blindly buy the bottom like that, but if you did, this would be what, a 13 to 1. Maybe you have like a 1 point stop. You'd probably catch like a 6 to 1 RR trade here, which would be pretty crazy if this happens consistently. But maybe with these two things, you also wait for price confirmation on like the 1 minute chart to go above the 5 minute candle high right here. And so maybe you get a trade that looks more like this. So this would still be like a 3 or a 4 RR. Pretty insane if this is accurate, but we don't quite have enough information on this yet. But we also, the line is gone now, but we also used to have a put wall at 733, which would be right here. And we can see again on this next candle, we also get very high volume, 2.2 times regular on that, and then that also sort of marks the bottom right there. So pretty interesting indicator. I'm gonna have to play with it more. But yeah, the market has been absolutely like dumping, and I think we're finally getting to a point where we are going to see a bit of a bounce. Let's look at the main like tech stocks really quick, because I want to show you exactly what I'm thinking. So if we look at Apple, we're now coming in on the weekly time frame. We're now coming into these previous all-time highs, which could act as support. Apple dropped like 6%. So I'm not really calling the bottom today. There's likely going to be a bit of a consolidation move on Apple tomorrow, I'd assume, sort of digesting that big move down. But we're getting into a level of support here. Same thing on Nvidia. We're now testing this previous level, which we rejected many times, and now we're above it, so it should be acting as support, which it does appear to be doing so far. So potential weekly support on two of the largest companies, and pretty similar here on Google, coming into previous all-time highs, and we can see this on a lot of different stocks. Not quite on Amazon, but an interesting level here for sure. I've had this little arrow, it's kind of hard to see, but I've had this arrow for a while saying that this is a level that I'd want to buy. Microsoft, this might actually be one of my favorites. The Microsoft chart has been trash, but I'll explain more later. Look at where we're at on this chart. Last time we got down this low, we had some pretty large upwards moves, upward days. And so could we be in for a big bounce on Microsoft? And so let's also look at the daily chart. We'll start back on Apple. So Apple is outside of the lower level of the Bollinger Band, and what that means is that it's overextended to the downside. So when it's beyond the lower level, you likely get a bit of a relief rally, sort of like we saw here, went outside the lower level and then got a bounce the next day. And so if Apple opens the day tomorrow below the lower level of the daily Bollinger Band, then I'm going to be looking to take long positions. And, as a side note, you never want to be going short at the bottom of a huge move. On most of these stocks, like the downward move has already happened. You probably don't want to be going short down here. You want to be looking and waiting for the long setup, in my opinion. All right, similar on Nvidia, we're at the bottom level of the Bollinger Band, not quite outside of it, but it's pretty close here. And then Google opened outside the lower level, but has come back into range now. And then Amazon, not quite outside, but sitting on support. And then Microsoft, probably my favorite. Look at how much Amazon has come down. If we go from here, which is June 1st, to where we're currently at, we're down 25% in the past, or 24% in the past 24 days. That's insane. And so it's definitely time for a bit of a relief rally on Microsoft, if you ask me. And I've got some more evidence using this indicator at the bottom for this one as well, but I kind of like this. I kind of like this level down here. We're at 350, which could be a good like round number that people want to buy at. And when we zoom out here, like I showed already, we're at a good spot to target longs from a weekly standpoint. And so then as I was looking into Microsoft here, I zoomed in to the 30-minute chart, which is pretty interesting. So this is today's session, and we can see that down here near the lows, we get 3 times the regular volume on Microsoft here at the low. And then after we get 3 times the amount of buying power during this candle, we then get this huge green candle next. So I think buyers are stepping in here, and looking at the volume profile, we can see that we've got a lot of volume coming in here on the very lows. And so at the very bottom of this downwards move, down 25%, when we were seeing lots of volume come in, I think people are panic selling. They're scared Microsoft will never recover, and they're panic selling. And I think people are buying the dip here. 3 times the regular volume is pretty crazy. And let's look at the 5-minute chart too. We can see some of these 5-minute candles. Look at this candle right here. 7 times the regular volume, and that's the lowest candle right here. At the very low, we had 7 times the volume and then had a huge move upwards. And so even if you waited, like after seeing that kind of volume, if I was watching this and I just entered on the next candle, if it breaks above the high or something, I mean, huge returns right here using this indicator. So that is pretty wild. I'm definitely watching Microsoft tomorrow. I think we could get a bit of a relief rally. But yeah, I will have to update you in the next video to see if I capture any banger trades. So hit like and hit subscribe as I turn this account into $100,000, and I am going to see you in the next video. Peace.